Monday, and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Mike Baudendistel back with us with a Rail Intermodal update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday carrier update presented by PowerFleet. I'm Zach Strickland, and today we continue to watch volumes move horizontally as the tender volume index, outbound tender volume index in the United States. Not a lot of activity over the weekend. Moving about, less than 0.5% day over day. But we are roughly about 11% down year over year. So not to be understated in terms of where we're at in terms of the national picture, the national volume scene. 87.14, not a great number, but the good news is that it is inching up slightly. We're about 0.5% up week over week, as I mentioned before. I've got a baseline chart put on here. Anything in the red is under 10,000. Anything in the green is over 10,000. Kind of our baseline for the outbound tender volume index in general. So we can see not a lot of green on this map, except for on this chart, I should say, except for this big push in March as the volumes, shot up dramatically to almost 13,000 in the month of March. But then we have since recovered significantly. Back here, you can see some of these holidays as we trothed out around Christmas and Thanksgiving, and we do kind of perk up a little bit right before those, as volumes do tend to increase around those times. Looking at what is the volume doing to national capacity? Well, not a lot, obviously. Less volume means obviously more capacity is going to be available for anybody out there, but it is worth looking at from time to time. The weighted rejection index, which is what I have pulled up here in the map and also this chart right here. This is a measure of tender rejection rate and market share. So market share, of course, going to represent those bigger markets in the United States with a higher percentage. They're going to value the rejection rates higher for a market like Atlanta over a market like Bismarck, North Dakota, for instance, which has very low volume or very low outbound volume. So to that regard, looking for any bigger changes in the weighted rejection index just helps you sort the markets as more of a priority. So right now we're looking at Atlanta being the most significant change in rejection rate with increase, I should say, in rejection rate and combined with market size at about a 1.47. A normal range of the weighted rejection index is about a -5 to a 5 value. So a 1.47, not a big move. Does not mean that you're going to rush to the spot market and see a lot of freight sitting out there on the load boards. It just means that week over week we're seeing a slight increase in rejections, and it's the most statistically significant rejection rate move in terms of market size in the United States right now. The interesting thing about all of this, however, isn't necessarily the Atlanta market itself, but looking at this light blue shade on the map. These are going to be the ones that have positive weighted rejection index values. A lot of those are located in the southeast. So the southeastern corridor this week may see some more stabilization, or maybe seeing more of the stabilization in terms of capacity coming back, or having a little bit more trouble than they were this time last week. Volumes, of course, staying a little bit flat right now, so maybe there are some network imbalances showing up in the southeast versus the rest of the country, which appears to be relatively white here. So that means that it is a near zero value for a lot of these markets. So not a lot of movement there. Looking at the outbound tender rejection index and the outbound tender volume index for the Atlanta market, we can see that the tender volumes actually bounced up a little bit over the last week or so. A pretty strong move relative to the rest of the market. Tender rejection rates, however, stabling out, flattening. So we're much higher at 3.85% versus 2.3% national average. So the Atlanta market is holding a little bit stronger than the rest of the country's national average. Not a significant move, however, but at the same time worth noting that it is one of the more stable markets in the United States. Looking at our outbound tender volume volatility map, we've got about a handful of markets sitting out here that are worth noting. Most of them, however, are relatively small, save for the Ontario and Columbus market. So the Ontario and Columbus market both showing pretty strong tender volume increases week over week right now. Again, not necessarily moving strongly. They're still both horizontal right now, but week over week we have seen volume increases in both of those markets, which are larger in the United States. So definitely something to pay attention to in that Ontario market as imports and volumes like that come in and replenishments start to push across the country. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I am Luke Falasca bringing you another broker update. And let's go ahead and start this week off strong. For starters, volume levels are continuing to remain stable. We're actually seeing a slight increase. If you notice this blue line here, we dipped very hard after the coronavirus surge. We like to be around the 10,000 mark. That's where numbers are typically sit. We're still about 13% below that amount, but we are inching up. I wouldn't get too excited though that we're probably not going to, get back to those levels anytime soon. But the good news is it does look like the bleeding has stopped. We have some confirmation of that. So fingers crossed that remains. Tender rejections, on the other hand, they've fallen very low, 2.74%, and they're hanging out down there. That's very low. Spot market rates are going to be extremely suppressed. The good news is you shouldn't have too much trouble getting your contracted loads covered by your carrier base. So that's a good sign. We're going to look at the reefer market, though. We are in produce season and really rapidly increasing. So the blue line here is the reefer volume level in the United States, sitting right at 1261, which is good. For reference, the orange line is 2019 reefer volume level. So we had this massive surge, but now that that's over, volume levels are actually remaining steady, and they are about almost 10% above where they were this time last year. So that's a really good sign. So if you're moving reefer freight, great. You should have some more volume, and we're going to look at some areas to capitalize on that. Let's go ahead and look at this map. This is the reefer outbound tender rejection weekly change, so over the last 7 days. So the markets in blue are where those tender rejections for reefer loads are increasing, and the red markets would be where the reefer rejections are decreasing. And then the white would be relatively unchanged. So a lot of increase over here on the West Coast and even Phoenix area. Also, Pacific Northwest, big produce season around this time of year, seeing a lot of increase. And then, of course, it looks like Florida is coming online as well for produce season. Not a lot right here all the way in the middle of the country. We typically see Little Rock, Arkansas has a lot of reefer activity going on. Not right now. It's pretty quiet at the moment. But as of right now, all along here, looks like the West pretty much is kicking things off. And also Salt Lake City is having a very big week, seeing some very big increases in those tender rejections. So if you're only moving van freight right now and you're looking for a place to get out and maybe expand a little bit, the reefer market might be kind to you. So look at getting in there right now. We're going to look at the Salt Lake City market. So right here in blue, we have reefer volume levels. So pretty volatile. We saw this massive surge up, right? This is that coronavirus surge, this blue mountain right here. Then we dipped down, but we've bounced back up. Look at how much we've already come off of that bottom. So if we ignore this little surge right here, because that's not normal, that's that black swan event, reefer volumes are actually higher than where they are for the rest of the time. So they're actually higher than where they were this time last year. So while volume levels have come down across the board, Salt Lake City reefer volumes are actually doing quite well. So if you don't have customers in the Salt Lake City market, this would be the place to call. And if you do have customers, make sure you're capturing as much of that volume as possible. Now, the green line here is reefer tender rejections out of Salt Lake City, and they're actually staying very suppressed at 3.22%. So we're actually a hair below the national average, which is right around 3.5% for reefer rejections. That's a little surprising. So we saw this massive surge up, and then we fell down right off a cliff, just like volume levels. But volume levels have picked back up, but rejections haven't. So what that tells you is that carriers are overly reliant on their contracted loads right now to keep the wheels moving, and they're taking loads for less. I wouldn't expect that to remain that way for very long. As these volume levels continue to elevate and remain elevated, carriers will catch on and they'll finally start to ask for those premiums. So do keep an eye on that as you're moving freight out of Salt Lake City. Now's a great time to get that volume, take advantage of some of those low rates, but I wouldn't expect them to stay there forever. I'm Luke, and then we'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to a Rail Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
Well, I've been talking about intermodal being down about 20% year over year. So I'm going to show you a few of the international trade trends to show us what we should expect going forward. So in blue, we have port shipments, lane to lane. This is one of the key lanes, Port of Shanghai to Port of LA. And what you see here is, of course, we had the Chinese New Year, combined with the shutdowns, the coronavirus shutdowns, which really caused this to be a more protracted dip than you would normally see, and it was also a more gradual recovery than you would normally see. But here in April, you see it getting to the full level that it was, early this year, late last year, and really this was basically a pushback of a lot of freight that would have otherwise moved sooner. Okay. So a little bit of a change in timing, but we've already started to see from the customs data this come down in late April, and so we're expecting the international intermodal to sort of come down with it. This is LA intermodal, international intermodal out of LA, so very tied to that sort of key lane.
So when we're looking at this, as you mentioned, a lot of this is coming from that slowdown during the Chinese New Year. So it's not exactly new production coming online that have been received after, say, the corona pandemic.
Yeah, I think a lot of it was produced before the shutdowns, and it's just now coming through the ports. I mean, some of it was stuck in China, and then it was just delayed by a couple few weeks. Here we look at the Baltic Daily Freight Index. So this is the only daily data series we have on ocean rates. And here you see sort of in late 2018, this was the tariffs, this big surge to get imports before the 2019 tariffs. But otherwise, you sort of look at this and you say, well, here we are in March. That's similar level to where we were, the previous March, from China to North America East, down 0.8% year over year. China North America West only down 1.4% year over year. So you would look at this and say, well, I don't see anything that's wrong. And the reason is there's been a lot of capacity that's been pulled out from all the blank sailings. There's been over 400 blank sailings worldwide since the corona pandemic started, and a lot of those have been in. First they were the China to Europe, and then now it's the Trans-Pacific China to North America. So in the coming weeks, anywhere between 20 and 30% of the sailings that would normally take place have been canceled. So there's really just been a lot of capacity that's been taken out that's really just provided stability to those rates. Where there hasn't been stability has been in air cargo, which maybe not terribly related to rail transportation, but the main reason you would move something air cargo is for speed. You don't have time to have it wait 2 to 3 weeks for that Trans-Pacific shipment. And you've seen, this is maybe my chart of the year, going from last year about $3.50 a kilogram to $8.50, and you see in some places over 100% year-over-year change. Of course, the main reason for this is fewer passenger flights, so you don't have that belly space. But I also think there was a lot of just shipments that needed to get into the country earlier, and because of all the delays in China, there just wasn't the time to send it on the slow boat, and it needed to go aircraft.
Got you. And so essentially what we're seeing is a lot of adjustments and operating a little bit more efficiently, especially on the intermodal side, as we see an excess of capacity on the market.
Yeah, the service levels on intermodal have been really good. There's plenty of capacity there. The speeds are way up. There's not a lot of delays, so it's not an issue with service. I think it's changing some of these modal patterns, and then going forward, is there going to be enough demand to pull through these shipments? We saw early today, Apple said that they are going to delay the iPhone by at least a month because of number one, production issues, and also just the lack of demand, they think, coming this fall.
Excellent. Mike. Thank you so much. We appreciate the update. And thank you so much for tuning in. That's going to do for this Rail Intermodal update. And that's also going to do for this edition of FreightWaves Now. The content doesn't stop here. We're always streaming around the clock. So check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.